what was the most interesting loan that you did as you were growing Allegiant, just in terms of one that was maybe extremely risky or just an interesting business that you've never thought of?
She was making $500,000 a year from her swimming pool. And I knew her husband, and he said, Marcia needs money. And I took a young banker with me, and we cut a deal to lend her money. And she financed premiums from her house.
It sounds like the culture piece and the execution piece were the two biggest that led to the growth you had. And I believe the growth was 11 million in holdings to 2.5 billion in holdings, somewhere around there. When would you say that you started to really truly move into that CEO role or this chief culture officer role? Because at the beginning, you're driving, or at least once, maybe more than once, you drove 168 miles with $750,000 in your trunk. You were making decisions along with your partner or with other people in the company on the flooring in the carpet and the branches. So when did you start to truly move away from that entrepreneurial, scrappy attitude of I'm going to do whatever I need to do to push this forward to I'm the CEO, I need to think about higher leverage activities in order to keep growing?
It was about 8 years in, about halfway. And in our terms, it was about $500 million in assets. Because we literally, I told you the 6 banks that started the year before, today, none of them are that size. And in fact, 18 years ago, a group of my people left and started a bank with a man I mentioned from your world earlier. And 18 years later, it's still a third of our size in what we did in 10. And because I was able, and it was because I had those 4 people around me, to step back and say, it's time to be CEO. It's time to exude the culture. And my wife, who was with this large law firm, came out one night to pick me up at like 6:00 or something. And she walked into the building because I don't know if she was ever there more than twice. And she said, my gosh, there's people everywhere, salaried people. And I said, yeah, it's our culture. And she had many friends whose husbands work for large institutions. She goes, and her best friend's husband, David, well, David doesn't drag into about 8:30, and by 4:30, he's in a bar with his buddies. And I'm looking at it because she knew they were counterparts, competitors, and they're in here. And I said, and they're salaried. It's a culture. The culture is we're going to do the right thing for our customer. I was a speaker a few months ago in an event, and the speaker before me was a tech guy, and he had done Microsoft and he'd done Apple. And this was, we both spoke to a group of 30 retired CEOs who are now directors, and people pay them money for their knowledge. And that's a wonderful thing. And so he was there and he said, I spent a day at Microsoft, and the entire day they asked me about Apple. He said, I spent a day at Apple, and the entire day they asked me about their customer. And what I see so many companies fail or underperform is they're focused on their competitor when your focus has to be on your customer. And I can tell I could tell by the little things. When I walked in your office today, you're focused on your tenant. They're your customer. And that's how you win, because there's always going to be somebody who's bigger, somebody who's faster, smarter, stronger, wealthier, all those things. But if you're focused on the customer, you're going to win so many more times than the others. And that's what happens, because I used to bank 8 plastic companies in St. Louis. And of course, I never shared information. They all knew, that so-and-so banked with the same bank. And it was interesting because you'd be at lunch or something and they'd say, so-and-so, this is the year they're going to go out of business. And I'm thinking, they're having their best year ever. They were so focused on the negatives in their competitor that they weren't thinking about the customer. Why was the customer going to them? That's what they should have been focused on. What was the customer's needs? And that's the best part of business. Know your customer. So we focused on our customer. And you're right. They wanted speed of delivery. We were convenient, but we weren't. If I would have built those banks, they would have looked like Northern Trust. They would have had marble floors and unbelievable hardwoods and fireplaces. And our customers banked in closed Hardee's and closed Kentucky Fried Chickens because they wanted the execution.
When you mentioned your customer at that time, would you say your customer was, the company trying to borrow millions of dollars for expansion? Was it the person that has 10,000 in savings with you, or was it the shareholders? Who would you classify as your customer?
My customers were the little old lady with $10,000 and the businessman or woman who wanted to grow their business. because you have to match assets and liabilities. So we had to be one thing to this one and one thing to this one. And that's the 38 locations were to the little old lady, because that little old lady was, how could she get that extra 1/4%? Well, I could give her that extra 1/4% in the beginning for one reason, is I had low cost. So if you don't have all those expenses, you can pay a little more for your money. It's no, in a restaurant, you have labor, food, and other expense. And, if you're pizza, you have less food costs and less labor. So you have margin that way. If you're a white tablecloth, you have high food costs, high labor, you better be getting in the revenue place. So you have to understand where you get it from. For the business owner, they wanted decisive speed, and that's where we made our money. And we were never bashful about charging for price. I have to tell you a story about an apartment guy. It's 1991. You were not born yet, but I have to tease you. I know you're a little older than that.
April 1991.
April. Okay. This was about April of 91. There was a guy in Kansas City who had 10,000 units, and which is a lot of apartments, as you know. He had bought phase 3 of apartment complex, which is beautiful, built in 87, 4 years old. He bought phase 2, which is built in 81, which was really nice, but, dated 10 years. And he needed to buy phase 1 built in 71, because to get to phase 2 and 3, you had to drive through phase 1. And phase 1 in 71 looked like it was 1971. So banks didn't lend money. And he needed a little over $2 million to buy these apartments. And he had the money to retrofit them. And so he wanted the money. So we gave him the money. We charged him 20 points, Raj.
Wow.
Okay, number one. So $500,000 on a $2.5 million loan. Number two, we got prime plus one tax-free, because they were tied to an industrial revenue project, Ron. So our yield was like 14% for getting the points. And he and his wife not only personally guaranteed it, they put a $500,000 treasury note up behind their guarantee. That's how hard financing was. But the point was, he got what he needed, and it changed. And he paid us off in like 2 years, and he came back, and I gave him part of the fee back, because we have to accrete it in over life loan anyway. I had to take it in income. But the point was, it changed his business. And he knew then what I'd learned 10 years before from my dad's partner one night when we were talking, a man who taught me a lot. And I said, isn't it terrible that interest rates are in the 20%? And he goes, Sean, it's irrelevant. What are you going to do with the money? That man knew the cost of the money, what it. He had to have the money, because he changed 500 units by changing 100. He changed his whole paradigm, the entrance to his property, everything he did. And so I always challenge people, it isn't always the cost of the money. And you said relationships, and they're very hard to get in these days, but it's the relationship, it's the opportunity, it's what am I going to do with it? Because you can't be overly focused. It's important to look at the big picture.
That's an incredible story. That number of units back then, and for someone to have the conviction in their plan to borrow under the circumstances, I think tells you a lot about the borrower, but also a lot about the bank that's willing to do that type of deal and understands the greater vision, which I think is a strength of, the U.S. banking system with community banks that can truly understand the types of deals that they're getting into. What was the most interesting loan that you did as you were growing Allegiant? Because, that loan there is very interesting to me because I'm an apartment guy, but do you have one that kind of stood out to you, like just in terms of one that was maybe extremely risky or just an interesting business that you've never thought of?
I could tell you about businesses. We had a woman, and this is the most, I want to tell you a little bit really quickly, that if you went to an insurance agent and you need to buy insurance, she did premium finance. She was making $500,000 a year from her swimming pool. And I knew her husband, and he said, Marcia needs money. And I took a young banker with me, and she literally was a very attractive woman in her pool in a swimming suit. And we cut a deal to lend her money, and she financed premiums from her house with a telephone 25 years ago. And she just made money hand over. Now that business is consolidated. The insurance companies figured out, if we get 25% down, we should finance it. And but in those days, there was disintermediation. That's why I say information's, I think the most interesting loan was a manufacturing company, and my father-in-law's union, and I think unions have a place. Like I said earlier, to me, the world is green. Where's the economic opportunity? And this man came in. They'd been in business about 40 years. They made a huge electrical generators, and he said, "We are losing. They're breaking even here. We're losing the battle to General Electric and people like that because our labor costs are so out of line." And he said, "It's not what we pay our workers. It's that they can only do one job." And he said, "When we're slow, we don't want that person to not come to work. We want to be able to sweep a floor, to move something." But the union rules were, he said, "This is not about a union. This is not about salaries. It's about changing rules, because with the rules, if I can have the rule change, I'll become more efficient." And he said, "I need $3 million to fight the union." And that was a difficult thing to wrestle with, because you had to make sure, not only underwriting, can he survive it, which I want to get to that in a minute, but you're dealing with people's lives on both sides, and you don't want to think you're God. And I'm not anti-union. I'm not anti-anything. And after a lot of deliberation, we said, we're going to do it. And it took him 9 months. It changed his company. It changed the workforce. They went from being a class system of I'm a this and I'm a that and you're that, to we're all in this together. They got really good wages because they weren't in St. Louis. They were happy. His productivity went up like threefold. It all dropped to the bottom line. They were healthier, and he's now deceased. But every time I see him after that, he would go, "Sean, you don't know what you guys did. You saved us and hundreds of jobs." So that was probably the most unique. I have to tell you this. You're in St. Louis, and this man just passed away. He's a really good friend, Drury Hotels. And I was a young banker at UMB, and I was the third person in stature in St. Louis. And I was in my office one day, and the reception said, "Sean, can you see Charles Drury, the founder of Drury Hotels?" And I said, "Well, of course, but, I don't know why," but he came in and he said, "The chairman doesn't have time for me, the president. I applied for a house loan. And it was $250,000, which 37 years ago was a lot of money. I know right where the house is." And he said, "I'm putting 50,000 down, and you all turned me down." And we didn't bank with them at all. Well, all the decisions were made in Kansas City. And by the way, Raj, today's my birthday. And today would be Doug Page's birthday, who was the chief credit officer of the company. Well, thank you. And Doug's exactly 40 years older. So I just picked up the phone and called Doug. And Mickey said, "1 minute, Sean," because that was the advantage I had. And that's what really helped me in St. Louis, was because I spent 2 years in Kansas City. And I'm sitting here with Charlie Drury and da-da-da. And he said, "Well, I'll call so-and-so in mortgage." And so Mr. Drury and I spent an hour talking. And Mickey called back and said, "Hold for Doug." And I did. And Doug said, "Sean," he goes, "we turned him down because he's a developer. And we didn't do business. We only made owner-occupied. We didn't do apartments. We only did owner-occupied commercial real estate, facilities that were, manufacturing, distribution, things where we did a lot of business with Walmart. They occupied their space, things like that." And I told him, and for the next 25 years, anytime we'd run into each other, it'd always be in a group of people. And Mr. Drury, who's unbelievably successful, arguably the best hotel chain in the country, because they've never had one close, would always put his arm around me and say, "Ladies and gentlemen, this is the only banker who told me no." And so that was a fun one too, but there have been some great ones.
Yeah, that's awesome. So Drury, I think they're based out of, or they were founded in Cape Girardeau.
They were.
And if I'm not mistaken, one of the key differentiators for them is they own all of their hotels. So you can't just get a Drury flag, I don't believe.
No, you can't. They own them all. The other thing is, and I don't know if they still do this, and I won't take you through the whole thing, but there were 4 or 5 key executives, him, his son, a man that was a very good friend of mine, a man that I knew through a club, and a 5th guy I didn't know. And they would independently go to the site, and then they come back, because sometimes you get groupthink. It's like if you take your team out to an apartment complex, and maybe you're lukewarm, but everybody around you is like, "Rah, rah, we need to do this." And their philosophy in those days was, and I don't know now, was if one person says no, it's a no. And so their sites are unbelievable. What most people don't is, because of his background, they bought, unlike the normal hotel chain, they try to buy the whole corner of the interchange. So like out at 141 and 44, They bought all that land because we did the part where there's a retail center, and there's a Ruby Tuesdays, there's a Bob Evans. They surrounded all their stuff there, so they had really foresight. They looked at it from an ownership thing, and I think that's so important. I tell people all the time, you don't think like an owner, and especially in the real estate business, and this is a lot of business where it's commission driven, is that they only think about the commission in that transaction. But when you're an owner, you're there for a long time, and they've just been unbelievable. They have a great product, and it's done nothing but get better. They've gone up market, and it's a great family and a wonderful story. And by the way, Mr. Drury reminded me that day that in 1974, when my high school built an addition, he was the contractor. He had heard of Thayer, Missouri. We had a lot of laughs.